right, welcome to phase two. Trump has phase two of the economic reset. That's what we're looking at here, right? The Great Reset. We began at the beginning of the year with the trade policy. Now we're rolling into the fiscal policies, right? The spending policies. So I want to make sure let me know if my volume is working correctly. Having some technical issues as usual. Technology is the one thing that pisses me off the most. Um, not a tech guy, but yeah, we're looking at phase two here, right? Phase two, the economic reset. We're gonna go over a couple charts and kind of talk about what that means. Trump has a buyer now. Trump has a buyer. He hasn't had one for a while. Let me double check to make sure this is working live. There we go. All right, we're good. So we're gonna go look at the S&P 500 and kind of analyze on the macro what's going on here. Number one, at the bottom, you should have our topics at the bottom so you kind of know what we're looking at here, right? We got the S&P. Actually, this is not the one I want. I want the SPY with the interest rates on it because we have interest rate risk currently, right? Here we go. Let's take the volume off. We don't need to see that just yet. Although it does look nice. You do have some volume. You do have some buyers stepping in, right? Let me know how the volume is, if everything's working correctly. Never know from my end. All right. So number one, right? Who are these buyers? What are we even talking about? The biggest risk to the market right now is going to be the deficit, which is causing panic in the market. It's causing, a lack of confidence in the bond market, which is causing rates to go higher. So as you can see, every single time in the past couple of years, if we go back, I mean, we can go back a little further. I don't want to go back too far. In black, we have, the 10-year Treasury rate, and then we have the S&P 500 for the chart. So I kind of want to highlight here. We zoom in. I kind of want to highlight here every time, right? This is a 4.5% for the treasury yields, right? Yields are the black. That's basically our interest rate. If you're new to this, interest rates, the bond market is the most important market because, it is the base collateral to the Western financial system, right? These are considered less risky assets, and they also set interest rates. So once we get above that 4.5 level, starting at the bottom of the red, once we get above that, we've had the S&P struggles, the market as a whole struggles. Not every asset trades the same, but you do sort of get that struggle point from then. Now let's go look back a little further. I should have put this on the weekly chart. We had it back here too. Same thing, right? Rates got high. Let me take the volume off now. Rates got high. I could probably turn this into a weekly chart. But once you get above 4.5, boom, correction, right? Every single time, boom, correction. This was the big correction in August of 2023. I remember that, right? We kind of rebounded, boom, went down, rebounded, went down. And that's just rate risk. You get rates are a little too high. You're basically, increasing the costs on a lot of businesses, especially real estate, housing market, and banks kind of blow up. And that's what we've seen in the past, right? Going forward. Or looking back. So going forward, we can expect the same thing. Interest rate risk is what we're looking at. We talked about this, and it started back in when we got the credit downgrades. And this is all tied together. We're going to talk about this, how it kind of ties together with the story. And that story is basically the US is running a crazy big deficit. Debt continues to grow tremendously. I wish I could throw this chart up really quick. Let's just take a look at it. I think I could switch over pretty quickly. Here we go. Right. This chart is important right here. And this is the US deficit, in the dark blue at the bottom is how much debt the US uses, right, or creates in order to fuel growth. It's sad. It's the story of the fiat system. This is why people buy Bitcoin. They're into crypto. This is why you buy stocks. You invest in stocks because your cash is always getting debased and the system is always at risk of default. The same way, if you take out too much debt, eventually your interest payments are growing bigger than your income, right, at a faster rate. Therefore, you might go bankrupt. And that's why the bond market's flipping out. And it's not, oh, Trump is doing it, Biden. This is just the way it goes. This is how it goes. It really started to accelerate in the 40s, World War II. And Again, in the 80s, when the Vietnam War, a lot of debt printing. So this, gigantic ratio, or this ratio of debt, is like, okay, we need to stop spending, right? All the conservatives and a lot of the Republicans are like, we need to slow down on spending. Trump is not. His initial plan was to do that, was to, hey, we're going to use the tariffs to sort of pay down the debt. And that just didn't happen. It wasn't really possible. And I think, Besant kind of pulled him back from that and said, hey, we can't do that no more. So now that this tax bill is going in, now we've recovered rapidly, right, from the S&P, from a lot of the market, because we're making trade deals. There's no imminent threat of global recession. So let's go ahead and get that out of our speech, right? Recession is not here. We're not looking at a recession. Employment is strong. Retail sales, a lot of our growth indicators are just accelerating. We're not worried about the recession now, right? Inflation, is that our worry? Not necessarily. It is literally policy mistake, right? From the Fed, or a policy mistake, either coming from the Fed or from the US Treasury. And both are kind of on the table. And when I say policy mistake, they can do one thing to upend the system, or confidence in the system, right? Now, Trump has pulled back from his aggressive trade war de-escalation, which is why we rebounded so fast. And, last time I think we had a video, maybe it was a newsletter we sent out. We're going to have a pullback, right? That credit downgrade hit, I think last Friday, boom. I thought we'd pull back right away. We didn't. Now we're starting to correct. We have a zone. We have some support down here, but the main concern really is, are these interest rates going to cool? Are they going to cool off? And I think the main reason they're going up, or they're kind of freaking out, and if you really think about it, it's about demand in the treasury market. And this is how we connect to the Great Reset phase 2, right? Phase 1, we kind of got that over with. There's a de-escalation from the trade war. We're not worried about, too much uncertainty. Now we're in phase 2, which is, how do we get interest rates lower? Trump failed to do that so far, right? He kind of got, some things lower. They did come lower for a little bit, but so far he's failed to do that. So this is the second attempt to do that. Now, you're not going to get the rates lower if you create the biggest tax bill in history, which he's trying to do. That's why rates started to move up as soon as he said that, that they're going to go ahead and just, take out more debt. And they're going to try to grow their way out of it, basically, right? They're going to try to grow their way out of it. Once we reached 4 or 5, let's see if I can see it on here. Boom, correction. Now we're rolling over. So once you get to, once he announced we're going to go ahead and pass the biggest tax cut in history, now you got a deficit problem. Now, if we go to TLT, right, which is the bond market, we're going to take rates off for a second here. You see the bond market is now, this is important. This is the collateral, and this is where it's like, where's the buyer at? The bond market is at a 20-year low. Let's go to the monthly chart. We're at a 20-year low. So there's not a whole lot of demand to buy US Treasuries. And that is sort of a crisis level, or a crisis risk, because now your rates should be surging. And, who's going to buy it? The Fed? Well, they're scared to step in because of inflation. So what do? Well, we do have a buyer now, and that's going to be these tax bills, or these fiscal bills that Trump passes over the next. We could have one of them Memorial Day or this weekend, which I'm looking forward to. Crypto looks great. Yeah, we're going to look at these technicals too. This is a morning star pattern. We need to hold above that midpoint, though. We need to hold above 578 to confirm the technical momentum, right? So we'll go over price analysis after this, but the main concern is who's going to be the buyer. So the stable coin, right? We have a stable coin bill, and I think this is our largest catalyst, I believe. Let's check out Bitcoin, right? We see Bitcoin starting to break out. We'll talk about price targets and all that, but we have Bitcoin breaking back out to all-time highs now. And we also have the global money supply ripping, absolutely ripping, because I think Europe is cutting rates again. China is accelerating their, QE, whatever it is. But, for the US, again, like I said, for the US, we're going to go to the VIX here. You had the VIX spike. Okay, big VIX spike because, whatever is going on with Europe. The trade deals, I'm not too worried about. It's going to come down to the buyer of US debt. Who's going to buy these US Treasuries without an interest rate surge? We have 2 buyers now that should be getting passed this weekend. I think it's going to be bipartisan because, hey, there's no funding if not. Number 1 is the SLR reserve. I think I have it down there. So we have the tax bill, no recession. That tax bill is a big rocket ship fuel for growth. Okay. But that's why the bond market is flipping out. Um, and you have this 4.5% rate risk. But the SLR requirement should be removed, which is for commercial banks like JP Morgan, Wells Fargo, all the big, big banks, the gigantic banks who really kind of run the system, who own the Federal Reserve. They have a limit to how many treasuries they can have on their balance sheet. If they remove that limit, you're basically saying, right? The Federal Reserve is basically saying they can come in, start buying these bonds. We're going to use TLT as the proxy. They can come in, start buying these bonds, which would put a bid or a floor in the bond market in the short term, right? That would put a bid or a floor. And what's really important, it puts a limit on the rate because they move in opposite direction. So who knows when it comes, but that's one catalyst right there. They need a buyer. The US needs a buyer. Mortgage rates are crushing home buying, right? New home buyers are just stepping back. People are uncertain about what's going to happen. You need rates lower. Energy's coming lower. That's great. That's good for the economy. I think that's going to fuel a lot of growth in SPX companies, S&P, and a lot of tech companies look great because part of that bill is going to fuel CapEx. It's going to fuel consumer spending, business investment, blah, blah, blah. But we're worried about the interest rate. That is the key here. So if you have the SLR requirements coming down or the ratio coming down, now you have a buyer. Now these rates get capped. Number 2 is the Genius Act, right? Let me go to these. Let's go ahead and read some of these. As a matter of fact, I think I have them here. Let's talk a little bit about what these are. Okay. And I don't think I started the other stream. It's all right. I'll ditch it. Or maybe it did. Oh, okay. Let's go Instagram. Wasn't sure. Having some technical issues as usual. Okay, no, it's working. I hate that. All right, so tax bills. So we have 2 tax bills. These are important for this weekend. This can probably, I think we're going to launch in crypto and Bitcoin. We're already at all-time highs. But number one, let's look at the tax bill on the right. We're going to be extending the 2017 tax cuts. And I think some other stuff. There's a bunch of stuff on it, right? Extension of the 2017 Tax Cuts and Jobs Act aims to maintain or eliminate tax on tips. Okay, that's more growth, right? But that pulls from the government's revenues. Overtime cuts healthcare subsidies. There's a big argument there. Large deductions. This increases a lot of deductions. You can do a lot more deductions, child tax credits, interest on cars, whatever it is. There's so many deductions on this new tax bill, biggest in history, right? What else is the big one? The SALT cap. That was a huge one that they were arguing about over the weekend. I think that's the main issue right now is the SALT cap. I'm not super familiar with it, but it's more deductions. It's basically, a cap on deductions, and there's all this other stuff in it. That's going to fuel growth, but you need a buyer. So I think what's going to be in there is raising those SLR requirements. So banks will be buying treasuries. They'll become the buyer, one of the buyers. And then you have the Genius Act, which is crazy for crypto. This is bigger, I think, than the strategic Bitcoin reserve for crypto industry in general, because we're talking about making stable coins regulated and basically legal for JP Morgan, Wells Fargo, big banks to create their own stable coins. They already they're already doing it pretty much. But now stable coins are in circulation. Now you have Web3. Now you have, the next move, phase 2 for blockchain technology being implemented inside the global financial system, right? Starting in the US, because we are the biggest system, the strongest, the most well-backed by far. You can say it's China to some degree, and that's kind of the war that's going on right now, right? The economic war between China. So what's going to happen is these stable coin issuers like Tether and Tether and USDC, Circle is the company behind that. Together, if you add them up, they hold about 200 to 300, and Scott Besson talked about this, $1 trillion of US treasuries inside their balance sheets. So they already are buying, keeping those rates they're not capping the interest rate, but they're a buyer. They're a source of demand for US treasuries. And that's what we need. We need more buyers. Trump needs a buyer. So if this thing gets passed this weekend before Memorial Day, that's what they say. We hope it, right? We're optimistic. Who knows if it actually happens? Now they're going to be required to back everything 1-to-1. They're basically going to be forced to buy more treasuries. And these are short duration treasuries. So you're looking at interest. I'm not sure how interested some people are on this, but we'll take a look at the, make sure I go to the right chart here. Short-term treasuries, check this out. And this is pretty cool. Like if you go to short-term treasuries, let's go to the 3-month. You're getting paid on in 3 months. This stands for 3 months. You're getting paid, and like this is different. 30-year, you're going to get 5% interest for the next 30 years, but it's kind of risky buying these treasuries at 30-year because you don't know if Trump is gone. You don't know if you can trust the government, and that's what the credit downgrade was about. That's what the freak out in the market is about, is the lack of confidence over time. Now, if you're short, you don't really care, right? 5-year, we can last. 2-year, I'm not too worried. I'm more certain about the next 2 years. So if you buy a 2-year treasury, what's really a bill, it's not a bond or a note, then you're getting paid 4% interest over the next 2 years. Now they have as low as 1 month, but these 3 months, you're getting paid 4.3%, right? For 3 months. And then you just recycle it. So that's pretty profitable. And that's how USDC Circle, that's how these stable coins, USDC, see if this is even on here. Oh, you can't really see it. You can't really see it. But that's how they basically make money, is they buy those treasury notes, they collect the interest on it, and they sell stable coins to Coinbase and other markets. And then what they go do is buy more treasuries. They keep buying more treasuries, which stabilizes the market. So that bill, excuse me, that genius act, it really is genius, because you're now having the crypto industry be the support or the demand for the treasury market. They're essentially, I appreciate it, Marco. Shout out to Marco. Appreciate it. That helps, man. It's lonely out here sometimes. I hate sitting at a computer, but I love delivering the juice here, because people make it so complicated. It's really simple here. Okay, I have the stuff at the bottom. It's really simple. I'm going to run it all through it. But the simple fact here is the crypto market, all you guys who are in crypto, you're trading, you're investing, you're actually supporting, especially if you hold stable coins, you're supporting exchanges, you're supporting the US Treasury, because all the coins that they need to print for, more issuance, they, people buy them, they pay a standard fee, they go buy treasuries, they support the treasury market, and they're basically funding the government. Now, there's other funders. Obviously, you have Japan buying bonds, right? You have China, but China's doing less. They're dumping more. They're dumping more supply, which is forcing these yields to go higher. Everything is about interest rates right now. This is all about interest rates. The biggest macro factor is interest rates at the moment. I see your comment there. I appreciate you, Veronica, Marco. Shout out to you guys. I'll throw the comment out there so I make sure I have it. So anyways, my whole thing is this. Look, crypto's going to explode. You see Oklo. We talked about Oklo last time, right? These nuclear stocks. Unfortunately, I sold I want to say like an idiot. I sold early because I thought we are going to have a bigger dip. Thing exploded to 40. What is that? 48.50 now? I sold at 38, right? I want to stick on this, but my whole point is this tax bill is humongous. It is going to rocket fuel. But the thing is, interest rates respond and say, hey, that's too big of a deficit. You need a buyer to absorb that debt to lower these rates. Now we have it with the Genius Act. If it gets passed, stablecoin issuers are going to be buying that debt. Banks are already buying that debt, or the treasury or the bond or the notes. But now you have JP Morgan, Wells Fargo, Citibank, Bank of America are now looking into the stablecoin industry, which would cause them to buy more treasuries, especially if you remove that SLR cap, that leverage ratio, you remove it or you lower the ratio. Now they can buy more. So guess what? QE, it may not be happening at the Fed, but it is now being directed into banks, commercial banks, and financial institutions in general. They're the ones that are going to be buying these treasuries. That also just, makes freaking crypto strong as hell, because now you get the on-ramp onto what we've been waiting for the whole time. And of course, I like Chainlink the most, right? Okay, let me hit your comments. So that's the whole thing there. Crypto industry will be funding the government, and that means they're going to get very favorable regulation going forward. Bitcoin's great. We all know Bitcoin, but what about these other coins out there, right? Who has the most potential? All right. So Marco says, I comment on all your TikToks. You do a great job. Thank you. Appreciate it, Marco. To do because of how many factors. There's a lot of factors. There is a lot of factors. Shout out to you, Veronica. There is a lot of factors out there. And it's tough to get all these factors. I want to, try to signal the most important factors, the key factors, which is this is all about macro. It's been ever since COVID is the macro. Where's inflation? Where's growth? Right now, growth was expected to roll over and it just didn't happen. Now it's like, oh, inflation. No, it's not happening. We're not seeing inflation either. All the rates are falling if you pay attention. If you're getting the newsletters or the emails, you'll see that, rates are not, I'm sorry, not rates. Inflation is not rising. This concern with the expectations is just, propaganda is very strong. You can call it propaganda. It is a real risk, which is if Trump makes a mistake, he could blow out the deficit. He could cause more inflation, but he's making countermeasures, or best at his team, the administration is taking countermeasures, which is Saudi Arabia is increasing production. Has anybody seen that? I mean, this is a big factor to me, which is oil prices. Saudi Arabia, or not just Saudi Arabia, OPEC in general, they're increasing production. That has to be some deal that Besant Lutnick Trump is making with them. Why would they do that when oil prices are at a 3-year low, right? 4 or 5, what is it? 3-year low? Yeah, 3-year low. Why would they increase production? Because they want to push out these other oil producers. Who is it? Like, there's some other countries out there, I can't remember all of them, who are pumping oil at low prices, giving it to China. So they're going to push them out. They're going to say, you're not, you're done doing that. We're going to push out lower. We're going to push out more oil, flood the market, so you're not profitable. And then as soon as you capitulate, we'll start cutting that again. Well, who knows when that is? Either way, they're getting oil prices lower. Remember the cost of energy, right? The cost of energy is probably the biggest factor to everything. AI is, taking up a lot of energy. That's the biggest factor to a global economy, to the entire system, is the cost of energy, right? Your light bill, your food, your energy. Energy does everything. So as long as this remains low, we're in a bull market. There we go. Iran, Syria, Venezuela. There you go, Veronica. So we're in a bull market as long as oil remains low. Most recessions happen when there's a spike in oil, because now you get a spike in costs. Boom, unemployment starts. People who are at the fringe, who are like, when I say fringe, they're near bankruptcy, or they're near, their margins are too low. Businesses are always, especially if they're new, they're always at risk of, I don't want to say collapse, but at risk of having to fire people to maintain their margin, right? Just because somebody has a business or is running business doesn't mean they're profitable. Look at UNH. UNH just got cut in half, biggest healthcare company. Now, that wasn't about energy prices, but it's sensitive. Equities and companies are very sensitive when it comes to interest rates and energy costs. Those are huge, right? So interest rates are still elevated more than we'd like. They're at historic norms. But if they come down, that helps a lot. Crude oil is down. We're great. So I'm not too worried about that recession collapse. This is inflation also. You're not going to get inflation really ramp up. It might be stickier than normal, right? It's probably going to be sticky, but housing is coming down. Over here in Phoenix, housing prices are falling. In the Midwest, or I think it's the Midwest, they're actually kind of rising. But in the West in general, where I'm at, housing prices are coming down. They're coming down in other areas. Shelters are the other big component. So things are working out here. Things are starting to play out positively. And really, it's all about interest rates. So what I'm saying here is, look, this is a great setup to buy the dip. I'm not telling you to buy the dip in any specific asset, but I'm saying the macro cycle, right? You see, we can use technicals. We're going to get your price action after we answer your questions. The macro cycle, the macro underpinnings, the fundamentals in macro are solid. They're very solid. We just need interest rates under 4 or 5. We need a buyer. And I think what happens is you have a capitulation here. As soon as they pass that Genius Act, now there's going to be a buyer coming. Psychologically, that's going to force people to say, well, shoot, if they're buying treasuries, it's safe to go buy them at this rate now, because people look 12 to 18 months ahead. Now you have a piling in of treasuries. Interest rates come down a little bit. They're not going to flood down unless the Fed turns on QE, but the Fed will be cutting maybe September now. You never know when they're going to cut. Growth is strong. You need inflation lowered, but they're going to cut eventually, just to loosen conditions a little more, to make sure there's no huge bankruptcies happening in real estate, blah, blah, blah. I think most of it is in real estate. We can look at bond volatility also. This is huge. I tell you guys all the time, this is the other big factor. When it gets to 140, that's when policymakers step in. The bond volatility move index. This is showing the spread, or the confidence, the lack of, when it spikes, it's showing a lack of confidence in the US Treasury market, right? The debt market, the US collateral. It's a lack. It spikes because they're saying, hey, we're not buying that. Remember the other day we had a bad treasury auction, meaning when the US Treasury came to sell bonds to the market, they did not buy the bonds at that level. They said, hey, you need to increase that yield. That's exactly what this is. You need to increase that yield if we're going to buy. Well, if you increase the yield, you're increasing yields and rates on the entire borrowing financing market. If financing goes up, scares the market short term because it's like, shit, that's too risky, right? And you have something happen. Rate the last rate rise, we had this rate risk was the tariffs. But guess what? We're not seeing bond vol rise. And the fact that we're not seeing that, I still think we have, 30-day window to really see, does it rise? If it doesn't rise, you're in the clear. Equities are going to rip. Crypto's going to rip. All right, let me go to your comments before I carry on here. I think these Middle East deals with the AI and NVIDIA could be linked to Saudi oil production. 100%. There you go. Yeah, that's true, Marco. There's deals going on. We're getting the right deals. And, there may be deals going on behind the scenes. There's a lot of deals going on. I think the main key here is that Scott Besson is a macro expert, right? He's been in the field for 20 years, 30 years with George Soros, who everybody associates George Soros as evil. Great, you can. But when it comes to financing, it's irrelevant. Evil and good both want good economies. It's irrelevant, right? It's just, do you have the right guy in there? So we do now. So Scott Besson, I'm pretty sure he's the one that told Trump, stop with, we need to back up on the 100% tariffs because we're going to collapse the bond market, right? That's when that bond vol went up. I'm telling you, soon as the bond, look at Trump came out this day when it went to 140, he comes out and says, okay, we're no longer increasing, or we're going to pause tariffs. That was it. So we can use the I call these internals. We can use the internals to find, and I am, making education on this because I can tell y'all blue in the face, but you want to see it organized. That is coming, right? I'm still working on a lot of this stuff. For if you're a new investor, I'm almost done with that course. If you intro to macro, got that course ready, go to the link of the descriptions in the bio. You should see it in there on YouTube, Twitter. You'd have to go to my bio. I don't know who else is on here. Maybe Instagram. I don't know where you are, but you can find it in my bio on my profile. I'll go over that in a minute here, right? But you need to be you should be educated if you care. If you're looking into the future, things are uncertain. You want to have an edge on how this might play out. So I think we're going to get a wave, a crypto wave. We're getting an energy nuclear wave. You remember the last stream we talked about this. Oklo, look at this thing, and I'll get back to you. Look at this thing. This thing exploded. I think I signaled it right here. We're just leaving like 25, right? I sold it at 38. Boom, takes off again, but it's up 100%, right? Oklo, and you don't want to buy these chasing it. You really want to see consolidation, a pullback. You don't want to chase it. It's just cyclicalized. It's just not a good habit, but it's there, right? You have Oklo, you have SMR. I still think SMR. Ooh, nice breakout. Oh man, flag pattern, right? I got the technical course on the way too for you beginners. Flag pattern, boom, breakout. That's beautiful. I like to see some consolidation. But man, that would have been beautiful. Nice pat. You got all the momentum climbing. See, this is what got me. I thought it was going to slow. Anyways, we'll get back to your comments. I just get too excited there to see that, hey, the whatever's in that tax bill, we need more energy. It is fueling. We need financing. We need a better blockchain system. Crypto's going to rip soon. All right. So anyways, yeah, closed doors. What else, Marco say? Housing inventory is increasing. Oil is staying low. Huge components in PCE, CPI reads. Might be the perfect storm for the Fed to come in and save the 10, 30 year without ballooning inflation. 100% yield curve control. Japan's been doing it for 1,000 years, right? 50 years, no inflation, except for until now because their rice is exploding. But rice is up. But yeah, yield curve control is what the Fed will probably do. Let me check on Instagram to see if there's any comments on there. I have to switch. No comments on Instagram. Yeah. So yield curve control is what basically the Fed would be doing. I don't know if they're going to call it that because the thing is, if you say yield curve control, stocks and crypto are going bananas. That's the Fed coming in, injecting massive liquidity. Who had to do this is the UK back in 2023. You had the gilt crisis, their bonds or their treasury market. It's called the gilt market. That thing imploded. That was the bottom of the S&P. That was the bottom of all markets. SPX, right? 2022. I know you're like, I don't want to go through all this, but I just want to back it up. The bottom was the gilt crisis. You can go look it up. It ended right here. October of 2022 was where the bond market blew up in the UK. They turned around, they increased liquidity, which I have liquidity on here. Watch, let me throw it on here. Let's go global liquidity. Let's go central bank, central bank balance sheets. Turn this up here. Put that back. So this was the first bounce in central bank balance sheets. We can even change this, I believe, to certain values. See if I can find the inputs. There we go. So we can find the Bank of England's injections right here. This is when they injected liquidity. Boom, big, huge liquidity injection. Market bounces, right? Now, of course, the liquidity rolled over, but it gave enough confidence, like a slingshot, right? It gave you enough confidence that, hey, they will step in. As long as the market knows the banks will step in, then the market's going to rip higher, at least the good assets, right? The indexes overall. So liquidity is huge, very important. And if we get another bond crisis, and I believe their bonds suck again right now, if we get a bond crisis or more crisis, or we get lack of confidence, which I don't think is going to happen, then the Fed has to step in. So you're 100% correct. They'll come in, yield curve control, whatever. They can use different words, different language. It doesn't matter. They're coming in. I think a big part of low treasury demand is the uncertainty of the 100% tax bill. Yep. It's big. It's big. And can you really fund it? How? You need to push out more treasuries. So if you're a bond buyer and you know that your bonds are going to get diluted, you're going to sell and you're going to wait till you see the bottom, right? Because you're going to get higher yield. So I think people are dumping bonds, or investors or institutions, because they're like, well, shoot, you're increasing the supply so fast that you're going to dilute me. So I'll come back later, right? But when they see the buyer come in, which is what I'm signaling here, is these stablecoin issuer companies and then banks now, when they come in, they're buying those bonds back. They're going to buy them back. So I wouldn't be long TLT. I know you're looking big for TLT. I don't know. I don't trust it right now. Eventually it'll rip. Maybe we have to wait longer. It might be end of the year. I like TLT as a positional hold, not as a trade. I did like it as a trade, but now I just feel like it just doesn't. I mean, I just feel like there's better opportunities out there, but it's not a bad idea to have some TLT, right? For sure. Maybe this is a double bottom, right? This could be a double bottom, and then that's it. So this would be a good spot to get long. I mean, the government's going to step in, right? They're going to step in. Let me take this off. They're coming in. All right. So Veronica says, did you notice global Dow Jones hit all-time high multiple times? I'd never seen the global Dow Jones. Global Dow Jones? What ticker is that? Yeah, I've never seen that. I just know I never use the Dow Jones. I always use the NASDAQ. Dow Jones average global. Yeah, I don't know what the global is. I wouldn't touch TLT until the tax bill clear. Yeah, 100%. You got the right idea there. You got the right idea. 100%. So, yeah, OPEC. So you have OPEC increasing hikes, which is going to keep oil levels low, and that's what we're looking for here, right? Oil's remaining very low. At least in this area, it has to recover. So it's good. I mean, oil prices are good. GDO, okay. GDOW. I wonder what's it. Huh? Why does TradingView not have this? Yeah, some of these indices are weird. Let's see if it's in the indice. Yeah, it doesn't show it on mine. I guess I don't have it. Um, do you purely do macro, or do you also equity fundamentals? I mean, I wouldn't say I'm purely anything. It's a little it's a little dip on everything. Just I'll do equity fundamentals, kind of depends, right? What you mean by that. If you're talking like earnings or PE ratios, blah blah blah. I don't necessarily believe in PE as a way to gauge in this environment, simply because the price has a lot to do with liquidity and the earnings has to do with the economy. So the more liquidity in the market, right, the more the central bank, and we're going to turn on, we'll go ahead and throw this chart on. We're going to look at this the whole time. So PE is good for certain, who is that? PE ratios, if you're talking about Ps, are good to gauge sector to sector. I like it as a comparison of comparing different sectors relative to their own history, or the S&P to its own history. There's always a spot where institutions are going to get long, right? Retirement funds are going to do a little extra because the PE is low and they know it's going higher over time. But I don't rely on them 100%. So yeah, I do some fundamentals. I'm not an expert on fundamentals. I started with it, but I feel like there's too much information that doesn't yield you a whole lot of price up, right? I like technicals and macro better because I think liquidity cycles drive everything. As a matter of fact, in this YouTube, I don't know if you guys are on YouTube, I have one of the posts, if you want to read it, on it explains the debt cycles and how technology plays into that. So this is the global, look at this correlation between Bitcoin and the global M2, which is global money supply, right? All money printing. You put it together, and Bitcoin is probably the most correlated other than NASDAQ to this cycle. And that's where I think the biggest opportunity is still in crypto. Bitcoin's about halfway through the cycle. Maybe, as far as price, I think it is about 4 out of 9 innings. But as far as time, yeah, we're more than halfway through the cycle. But you have, I mean, man, it's hard to call it. There's so much more that can add to this rally. I think we go to 150 by the end of August. I don't know that, but that's just my guess. If I look at the trend and I use all my price analysis, which we can do, I think we'll go to 150, somewhere around there. Let's see, valuations, earnings ratios, trying to find undervalued stocks and margin at a margin of safety. Yeah, no, I'm more of a growth investor. I'm not really a margin of safety. That's just where I'm at. It fits my personality more. Can it hurt me? Yes. Is valuations valuable? 100%. Yeah, 100%. I wouldn't buy I mean, what I do is um if I'm looking at comparing a certain industry, like the nuclear stocks, then I will definitely go through valuations to see which ones are risky, because you don't know by looking at price action. Price action, you could trade it, but if you want to sleep at night, you want to make sure you have a pretty solid valuation. You want to make sure that the PE is at least coming down, or expected, the forward PE, right? Your ratios, your liquidity ratios are healthy, where they're not going to go into bankruptcy. And they have rapid revenue growth. I just stick with revenue growth. My big thing is revenue growth, balance sheet, debt, and I'm not worried about cash flow. I look at early stage growth. But no, I'm not into big companies with margin, with comfortable. I think you could just buy ETF for the S&P and still get how many companies are really beating the S&P that are very valuable. So I mean, maybe I'm not talking about what you're talking about, but yeah, for diversified portfolio, 100%. Valuations are important. They have their place, but some people only do that. So I incorporate all of them, and I'm not a big diversified guy. Like, oh, I want 100 stocks or 50 stocks. I think it's just like, hey, what are the biggest plays over the next couple of years? I'm more of a position trader. I'll swing trade. I'm not the best day trader. It doesn't fit my lifestyle. I don't like sitting in a chair. I have a bad back. So sitting there is tough for me. And look at Bitcoin. If you would have bought it, when we had some support in the trend at the bottom of the trend, and this is signaling a lot more upside for Bitcoin. So I'm more of a position trader. Anyways, you have BTC 5% of your portfolio. Always add when dips 100%. Yeah, you're straight, Marco. Seems like you have a good understanding of what's going on here, and I'm here to just sort of guide you on simplifying the information. There's a lot out there. Do you want to be right? Do you want to make money? Do you want to be right, or do you want to make money? Yeah, you're right. I've made so many mistakes trying to be right. I still hold that SMC new scale buy you gave us 100%. Nice. New scale, right? Is it new scale? SMR. Yeah, SMR ripped. SMR ripped. I think I signaled it somewhere around 19. And hey, throw in the chat if you would like. I don't know if you guys are receiving the newsletters. If you'd like more analysis, price analysis on some opportunities, because that's what I'm also kind of shifting towards, is making group emails where it's just for technicals, right? People who want to see technicals or potential breakouts. I think we're going to jump into that next. These would be position trades, not day trades, not weekly trades, but more positions. Like, hey, the macro environment is very nice. The risk reward is very nice given the the technicals. The macro is showing a lot of promise. The fundamentals are solid. I would never evaluate a company that has crappy fundamentals compared to its industry, right? Not compared to every sector, but compared to whatever industry it's in. Um, so yeah, SMR. Look at, I mean, the liquidity goes with a lot of these risk assets. You see, it leads. Look at the peak here, then the peak here. Liquidity leads these risk assets, right? So, anyways, 15 SMR. Now you're good. Okay. So let's do some price analysis. Um, I think that's all I had left right there is the SLR. Okay, the economy solid. The Genius Act we might get this weekend, hopefully. Breadth analysis and price analysis. So breadth is slowing. We're gonna go ahead and look at the cycle. What I'll do is I want to start with Bitcoin because I think this is gonna destroy. I don't want to say destroy everything. Obviously, there's good plays out there, but um, it is a bellwether to the crypto industry or to risk conditions in general. So we have money supply growth hitting new highs, all-time highs. Europe is printing, China is printing. I say it all the time. Japan is printing. Bitcoin is swallowing and absorbing a lot of that because it can't be debased. It is the ultimate, it's like gold. It's like gold, except for the new generation. They're not adopting gold, right? A lot of us are not, we don't care about gold. We'll limit it. Bitcoin is new, it's small, it's up a 2 trillion asset, probably goes to 20 trillion over the next 5 to 10 years, can go to 20 trillion. JP Morgan's buying it, BlackRock's buying it. It's kind of game over. It's kind of game over, right? So when we look at these, let's look at the price analysis now, because we do have money supply ripping higher. I'm gonna turn this off. Okay, and we're just gonna do a little bit here. Just gonna do a little bit on this one. So Bitcoin's at all-time highs. You have we look at MACD, we're starting to reaccelerate from the lows, right? This is our MACD cycle. It's very slow. The MACD is slow. It lags more, in my opinion, than I like to use RSI and MACD. It lags more than RSI, but it does tell you sort of like, hey, this is where the big trend is swinging. So we're starting to turn, we got the signal line where the faster moving average is crossing the slower moving average. That's the buy signal, right? I don't want to say it's the buy signal. It is the confirmation that momentum is really picking up. Now we have RSI also really starting to pick up. Once we get over 70, and I was actually working on this today in my course for technical analysis, which is, when it comes to uptrends, when you're in an uptrend and you hit overbought on the RSI, that's not really a time to sell or a time to get, skittish. Really, for at least for crypto and uptrends, that's actually another momentum catalyst. You start doing hyper moves, right? You get to this area. Now, if you're in a very slow, like S&P 500, they kind of drag, or, Johnson and Johnson, some type of value dividend stock, they don't tend to have crazy momentum above the 70 RSI. But Bitcoin does. Once you get above that 70, boom, you get a second leg of momentum coming into the market. Oh man, I have a haircut at 3. Okay, I'm gonna have to cut this short. We got 10 minutes. Look at my hair. It's bad. I need to get a haircut. Got a graduation to go to soon. So let's wrap this up in about 10 minutes. Throw out your questions or opinions out there, and I'll cover them. I just want to show Bitcoin's momentum is picking up here. I got the RSI indicators. Remember, we had the EMA. Dang it, I have too much stuff on here. Let me go to another chart so I can show you that signal. Let's go to this one. Right? The Bollinger Band signal was very strong. This is what got me, and this is another value risk. If you go to the newsletter, I did one on Chainlink about it. It goes more in depth about the price analysis. So go check that out. I just printed it. As a matter of fact, let me show you guys really quick if you're watching. Let me flash it. I got in trouble for flashing it on the social medias. Okay, this is it. You're gonna get a newsletter like this. I just like to call it my daily notes. I don't write every day, but I write when I find it's significant. Maybe four or 5 times a week. Just throwing out different stuff, right? Crypto things that I think are important that's going on. Here was the credit. The correction begins. I called the correction. What is this? What date was this? May 17th. So what, 6 days ago, I said we're gonna have a correction. And I did I put where it would come down to? Oh yeah, right here, right? First bounce. Look at that. First bounce was at the top. And where are we? We're literally right here. Now, it's up to how these tax bills get passed, whether we bounce and go higher or whether we fall, deeper into it. I can't predict that, but you can see when something's going to happen, right? You got macro, you got fundamentals down here, earnings growth. This is important. This was a really good one. This still is in play right now if you want to read some bullish stuff. This was earnings growth. Look at profit margins are actually higher for 2025 than they were last year, meaning analysts have actually increased their profit margins for the S&P 500. The last thing we need is the ISMs recovering. We have deregulation. It hasn't hit yet, but it's coming. You have no, we don't have rate cuts. We don't have we have so much fuel. Just stay tuned. Go check it out. We have so much fuel left, but this is it. These are the courses. If you want to click on it, boom, you got a couple courses in there. Email me. I'll give you another 50% off. Send me email or send me something if you want to jump into it. And then if you want to schedule a call, you can do that. You want to donate me a coffee because I like coffee, blah, blah, blah. You want to read about, anyways, we'll go back to the charts. I just want to throw that out there. I'm not I'm not great at marketing and sales. I'm just not a salesman. I'd rather sell you guys something good. Let me see if can I even get the chart on? Here we go. All right, but I'm working on it because there's a lot of people that need to, I need to get them to buy into this so they can invest and compound interest and, protect their wealth over time because the future comes really quick. So anyways, this Bollinger Band for Bitcoin, you consolidate beneath it, when you hit twice, remember this if you're on here, you hit the top of the Bollinger Band after moving over the midpoint, you hit it once, that second hit is for Bitcoin anyways, every price is different. This doesn't work for every asset. They all move differently. But for Bitcoin, when it hits that second move, that's it. That is breakaway zone. And I said, hey, we'd be at all-time high soon. And then within 30 to 60 days, you're looking at 150K. So we hit 111. So I'm expecting 150. That was the Bollinger Band breakout. Plus you have all these other RSI, all these other momentum indicators picking up. The daily is sort of consolidating, but the weekly is very strong. The weekly is much stronger, right? Boom, weekly is much stronger. So maybe we get a second leg in early June or mid-June. My guess is mid-June, we get a second leg to 120. I have no clue exactly how it plays out. You never know. There's a lot of stuff. But if we get that bill passed, the monthly looks really good too. Look at that. The monthly looks also really good. So if we get that bill passed, we're gone. All right. So Marco, I'll hit your stuff. Opinion on SMH versus SPY. Good question. This is an internal reading. So SMH versus SPY. Let's see. Semis led the original bull rally from 2023 to 2024. I feel like we need those to lead again. Every bull rally has an industry that leads 100%. Marco, smart guy, man. Smart guy. Thanks, Veronica, for subbing. Appreciate it. Hope it's good value. So yeah, you're right, man. I like AMD. I know we've been saying that for a while, and AMD's dragged lower. Unfortunately, you can't get them all right. AMD surprised me, but AMD setup is very beautiful. Just FYI, I got call options out in 2027 January. Very small position, nothing big, because I'm kind of waiting for more technical. If you want to see the AMD, throw it in the chat, and I'll do a blog post on AMD's price analysis. But I like AMD's breakout. Now you said, should SMH start to lead again, or do we want to see that? I don't know exactly who will lead, but the semiconductor industry is gigantic. So yes, you're right. We do want to see it outpace S&P 500 for sure. We want to see that. Now, if we do some price analysis on the monthly, you can see it's starting to reset lower, right? But on the RSI, it could have bottomed. We're at the halfway. We're holding that halfway in the RSI and the monthly at least. Let's go to the weekly, see what it looks like. Okay. Bollinger Bands are important because you can still see the momentum's picking up. MACD and then RSI. This looks good. This looks really good. Now the Bollinger Band, what I want to see, Marco, is us pushing to the red. Now SMH might be different, but let's look at the past, right? When it really led, we can go back 2 cycles. This is the last cycle. You got to the upper band, you pushed it. Remember, I said you want to push twice for Bitcoin. Maybe it's the same for this. You pushed against the upper band, you reset, you very small time period, pushed a second time. That's bull case. Now you're on. Now you just need to hold the midline. We held the midline, boom, you're off to the races. You're gone, right? So I think we need to push to about a 44 ratio. You can't really see it. Push into the upper band for the weekly, pull back, hold the blue line, push a second time, and then I think we're off to the race. I could be wrong. That's just one way to start processing the Bollinger Band. I mean, it looks good down here. We're starting to cross. We're still early, but we're starting to cross. And if you want to get in, you want to get in early, right? For semiconductors. But yeah, I think they'll lead again. You're getting a lot of investment in all these other places. Price was just very over. I mean, I think price just got too big, right? NVIDIA's valuation was just too big, too early, too fast. A lot of people took profits. A lot of institutions were like, look, we're way too high in the profit cycle. The earnings growth is coming down. So to answer your question, I think we do need semiconductors to lead again. We need a lot of the tech and discretionary. So this is a good chart we can go to. I like to do this. What are we at? 225. All right, I got 5 minutes. What I want to see is SMH. You're right, but I want to see a lot of these sectors really start to lead. For example, this is the cyclicals versus defensive sector. So you have consumer discretionary, right? When you talk about cyclicals, and hey, if you want to join the Discord, let me know. I will send you a Discord link, or I'll send it somewhere. I'll send the link somewhere because I have a watch list of all these different. I don't know. Maybe you just want to come in the community, right? We're building stuff. We're building the Discord up, and we got a lot of stuff coming. All right, so cyclical, yeah. So cyclicals versus defensives. We want to see the cyclicals outpace defensive again. Get back in this bull trend at least. We try to come up, right? That's one of them. You talk about SMH. I'm just looking at the other stuff. So cyclicals versus defensives. The ticker is, we'll see all this stuff will be in my Discord. Okay. Altcoins versus SPY. I want to see this pick up also, right? I want to see alts lead SPY. That's a little more risky. I know you're looking at semiconductors. And then you have consumer discretionary versus consumer staples. This is another signal. You want to see this start to make new highs. I mean, it's already trending up. I think we're in a good space. You know who's really breaking out? Micro caps exploding versus small caps. So another risk on signal, right? And then we have IPOs. I mean, they're at low, they're pretty low, but IPOs picking up. You had Galaxy Digital jump on. So yeah, you're right. Let me see anything new. We didn't have a chance to get to all the breadth indicators, but I will say this. I want to look at the 200 moving average. This is my only concern right now with the rally is that we fell below the 50% breadth, meaning 50% of stocks were below the halfway ratio. We want to see at least half of the S&P 500 stocks trending above their 200 daily moving average. We're below that. It's rate risk. It is pure rate risk at the moment. That's what I believe it is. Let's go to, yeah, I think it's just pure rate risk. What else we got here? Appreciate it, Tanner. That's the man right there. Tanner Max. Last question. You have any fears with ITB and housing construction? Good question. Honestly, I haven't really thought about it too much. Let's look at the trend. Let's see what it looks like. Take this off. Let's go to the monthly chart really quick. I don't have an answer to that right off the bat. I haven't thought about home builders too much. I mean, if we look at the technicals, we may not be done with the down cycle. I'm going to use ITB. I think they're pretty much doing the same thing. Let's go to the weekly, see if they've reset. Trying to bottom on the weekly. They're trying to bottom. My initial thing would be we need the tax. I'll put it this way, Marco. If we pass the tax bills, right, you're going to get consumer spending like crazy. And I think housing demand should pick up for sure. But you really want the rates to come down for their margins to pick up. So I think that Genius Act is going to come number one. I think we really need to pass the Genius Act. Why? Because we need the stablecoin issuers to buy those treasuries so that it can cause a wave of demand back into US treasuries. What was the trading view breadth ticker? Oh, okay. I have a bunch of them. I need to just throw these in the Discord, but I have a bunch of them. Let's do the 200 daily moving average. So one of them is I have all these. Like, these are all breadth. I'm running out of time here. These are all breadth indicators. I can send them in. You know what? I'm gonna send. Are you part of the Marco? Are you part of the email list? I'll send them in an email. Breadth indicators. I'll just do that, or I'll make a blog post about it. But just so you know, right now the 200 moving average, SFFD. You should be able to see it. It's on replay. So that's one of them, right? And then you have some other ones over here. Let's do how many stocks are above the 50-day moving average. This is a big one. This one looks really good because we got to 70 and then we're at 60. So we're still above the halfway mark. But we got up to 79. So here you'll be able to save it. You'll be able to replay this video to see that SFFD. Matter of fact, you could just see it on the side right here. Yeah, look at these, Marco. Just check these out. I forgot that. They're literally right here on the side. These are all breadth. And then these are relative strength. So I got relative strength, and they're not all. Some of them are VIX because I want to see it. And then you have new highs. These are all indicating or measures of new highs, right? What type of new highs? 5-day high, 30 new highs. And these are above moving averages. So you'll be able to look at that. I think we're out of time here. I got to keep it short. I would say, you know, I really like MicroStrategy. If it picks up, it pissed me off, but I did put in the newsletter. This is the paid newsletter. I want to see MicroStrategy. You'll be able to see the price analysis at 340, right? That is the bottom, I think, for MicroStrategy, who's loading up on Bitcoin. 340, somewhere between 340 and 360, I thought would be a good spot. Now, it did surprise me how fast it dropped. It pissed me off because I'm like, bro, I just loaded up on debit spreads, right? Long debit spreads. But this is a chance to get some equity in MicroStrategy before it really takes off. I know I'm not going to have enough time to go through the whole thing, but this should be a nice play. They have a lot of products. I'm not saying go buy it right now. I want to see a little bounce on that. Take this off. I want to see a little bounce, but it looks good. I've been watching this for a while. Price target could be between 900 and 1,000 at the end of the year. I mean, we can't tell that far. It depends on the macro, but I think it's definitely going to like 650, somewhere around 650. And then, of course, I love Chainlink's price action right now. This is really, really good. I think they benefit the most when it comes to stable coins. Really beautiful trend. See, I was charting it. Uptrend, very nice uptrend. I think the spot to get long was not just to get long, but the spot to trigger a big move. It was in the last newsletter. Was this reverse head and shoulders? Let's see if I could draw it real quick. Here's the brush. Shoulder, head, shoulder, and this is perfect because we got a pullback, right? Pullback support. So we broke out, came back. We're supporting that 15, right? Fair value. I believe the fair value measurement for Chainlink is like 15 to 14. So I would still load up here. But, and I'll send some chart outs on Twitter eventually, but it looks really good. It looks really good, right? It's going to consult. The more it supports that level, you get a breakout. I think we go to about 30, probably touch 25 first, and then go to about 33 to 34. You know, just factoring all the other stuff. Now, if that's the key thing here, I want you guys to know is, what up, Chavez? That stable coin bill is huge. It's huge. It opens up the gates for institutional adoption, or for banks to really start saying, okay, we're all in on decentralized finance. That comes first, not these meme coins and art. It's decentralized finance. They want to plug and play and go ahead and start finding new ways to create yield, new ways to loan, to finance. It's all about the money, right? Anyways, I appreciate you guys paying attention here. Go ahead and like, subscribe if you don't mind. Help me out with the algorithm. And check out my newsletters. Go check out my page, and I'll send stuff out whenever I have time. But I appreciate you guys. Stay blessed. Have a safe weekend, and take care of your health. Right, I'm always about fitness. Get your workouts in. Get your heart going. Eat healthy. And stay blessed. I'll catch you guys next time. Thank you.